China is entitled to have a relationship with Russia, but, anything of military aid, well, we're going to sanction you. Now, this is the whole driving force behind, I think, the strength in commodities, strength in gold, is that these countries look at gold, which has outperformed for 25 years a treasury bond by a huge margin. It's outperformed the S&P, and it's done so without counterparty risk, without sanction risk, without default risk. And I think this is what is putting a floor under the price of gold, which I expect to continue to rise.
CEO of Miles Franklin, AndySchectman, points out the irony of the U.S. threatening sanctions on Chinese entities for aiding Russia while engaging in similar actions. The United States' ability to weaponize the dollar, using it to impose the dollar, using it to impose sanctions and maintain its geopolitical stance, has raised concerns among BRICS countries, particularly China and Russia. Andy argues that these geopolitical tensions are boosting gold prices, which have outperformed treasury bonds and the S&P 500 without the risks of default or sanctions. Gold is up 12% in 2024, outpacing the S&P 500's 10% gain. For 2024, gold is on pace to surge past the S&P 500 by the widest margin in a calendar year since 2022. That would represent a wider margin of outperformance than in 2022, the last year gold outpaced stocks. While stating his perspective, AndySchectman stresses that gold and silver may not have a clear peak in sight because nobody wants to be left holding devalued currency. The United States, under President Franklin D. Roosevelt, devalued the dollar in 1933 by 75% against the price of gold, leading to a significant rise in gold prices. This era vividly illustrates how currency devaluation can enhance the appeal of gold as a store of value. Referring to a recent event involving a notable sale of gold futures that briefly impacted prices, Schectman hints at the possibility of intentional market manipulation. Nevertheless, he maintained his belief in central banks strategically favoring gold as a safer asset over treasuries. Central bank purchases and other related issues have driven the rise in gold prices since 2022. With the growing demand for gold, the pressure faced by U.S. Treasury securities will likely continue. Now, we present the clips of AndySchectman's insights from his recent interview with Stacking Surfer. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
What I see happening, and I would say, look, there really isn't a real top for assets like gold in dollar terms because, just like who wants to be the last one holding worthless paper, I think is the way that the central banks are looking at it. Of course, Voltaire's statement, all currencies revert to their true value of zero, I think in this case is very true. And look, the bottom line is that, the central banks, they don't care about any of these correlations. They're just trying to, I think, de-dollarize and accumulate metals. And they're the ones, in my opinion, that are pushing this up. And I don't think you've really begun to see anything yet because there's an old statement that says there's no bull market like a gold bull market because it speaks to a different mentality. It doesn't speak to wanting to make profit. It speaks to protecting your ass. And this is why you see at 3 p.m. last Thursday a $1.6 billion sale of gold futures in about 3 minutes, which temporarily knocked down the price. But, you do something like that, you're either a complete and total moron or you're doing a drive-by shooting. Because when you sell that large of a position, the idea is to bleed it out over time, not dump it onto a very thinly traded market at the end of the day, when really it's in a transition between New York and Asia, and it's just complete stupidity. But anyways, bottom line is, yeah, it does seem like this is different. It seems like the central banks, in my mind, are choosing gold over treasuries, which have the risk of not only default, but in the case of our brain dead Treasury Secretary, who in Brazil said, a member of BRICS, we need to confiscate, not just sanction the Russian Forex reserves. And now she's at it again. And in an interview with CNBC from the, it's too stupid to be stupid category, she says the United States is prepared to sanction Chinese banks and companies, as well as Beijing's leadership if they aid Russian military in its invasion of Ukraine. Well, it's okay for us to aid the Ukraine, but it's not okay for China, their ally, to aid. So now we're making demands. And, she goes as far as to say, that we stand ready to act if we see significant violations, and it's anything that involves Russia's military aid is unacceptable. And the whole thing is nuts. She says China is entitled to have a relationship with Russia, but anything of military aid, well, we're going to sanction you. Now, this is the whole driving force behind, I think, the strength in commodities, strength in gold, is that these countries look at gold, which has outperformed for 25 years a treasury bond by a huge margin. It's outperformed the S&P, and it's done so without counterparty risk, without sanction risk, without default risk. And I think this is what is putting a floor under the price of gold, which I expect to continue to rise.
AndySchectman also voices concerns about excessive fiat currency printing, which he believes drives inflation. He proposed pegging a portion of new currency to gold to ensure stability and curb unchecked money printing. Currently, no currencies are pegged to gold or any other commodity. Therefore, the money printing machine is essentially unlimited in countries with their own currency. The idea of a BRICS currency pegged to gold has been occasionally discussed in the media, both within the member countries and beyond. This proposal aims to streamline trade regulations and lessen reliance on the dollar and euro in global transactions. However, the timeline for introducing such a currency remains to be determined, as it involves complex economic and geopolitical considerations. Drawing attention to the historical relationship between gold and silver, AndySchectman hints at the possibility of significant future price increases for both metals. He forecasts that gold's position as a monetary asset would likely strengthen, particularly if it integrates with blockchain technology to bolster transparency and trust. Let's get back to the interview.
I don't know, kind of God help us if we do. I mean, unless it's alongside in states like we're talking about, I do believe gold will back a new system. I do believe there'll be a marriage of blockchain and gold in just like the BRICS have been telling us for the last 3 years. Why would the most influential bank in the world reclassify gold as the world's only other tier one asset? Why are the central banks buying it hand over fist and haven't stopped since 2017? Why are they all repatriating it from exchanges and from the Bank of England and the New York Fed? Why won't the New York Fed tell us how much gold they have sent out of their holdings to other countries? The whole thing is really weird. I think it is that gold is being remonetized across the globe. I think the weaponizing of the dollar has pissed off so much of the Southern Hemisphere, if not most of the world. And more than anything, it's created a situation where we are not trusted the way we once were. And so gold is replacing the bond. And ultimately, that would mean gold will go higher than people think possible. And there's a 90% correlation in all of history between gold and silver as well, by the way. So, I think sky's the limit for where this market ultimately is heading. Certainly, but I just think that it's happening. If you pay close attention, you can see it happening. And I want people to think, when you think of the central banks, it's not just that they have more money. They know the playbook. They all started repatriating their gold and accumulating it in 2017 and 18, massive amounts, where in 2018, a group of central banks who had just repatriated all their gold from the New York Fed bought more gold as a group together than they did in the 60 years previously combined. In 2019, that number doubles. And then, out of the clear blue, the BIS reclassifies gold as tier one. So, gold will be money. It's a question of, I think that's where the blockchain comes in, is that it allows it to not be convertible. In other words, Gresham's law, or even de Gaulle from France, who came and requested all the gold, which made Nixon close the gold window, proves convertible currencies convert. And if you can show the immutability and the veracity of what's backing it, pegging it to a system, having it audited, et cetera, you have a shot at gaining trust, where people say, fine, the Fed or this institution does not have the latitude to print. And the way to find a middle ground for that is to peg 10 or 20% of every new currency unit to gold at a fixed price. And so they still have monetary latitude to create more money or to do things, but not so much to go off the rails, where a country like ours can just print, where in the last 4 years, this country's printed more money than in the history of the country preceding it. And now we're paying the price for that with inflation that is nowhere near fully done expressing itself. So yeah, I think it will be money, but I don't know if we'll be spending it at the store like they did in the 1800s.
Gold's volatile push above $2,400 last week could represent the precious metal's high watermark for the year, as markets adjust to expectations that the Federal Reserve will maintain its aggressive monetary policy longer than expected, according to one research firm. How do you perceive the correlation between geopolitical tensions, such as U.S. threats of sanctions against China, and the rise in gold prices? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.